Hey Jamie, hey Steve, what's going on this Monday?
Hey, what's up, Scott?
Hello.
Steve, what's happening today, buddy?
Happy Monday Day.
It is. It's a happy Monday. So welcome everyone to the Office Hours webinar. I'll be your host, Jamie Hodge. Got my trusty wingman, Steve Gomez, in here as well. So without further ado, let's just go ahead and make the lawyers happy and just buzz through the disclaimer here. Just always like to make everybody aware of the fact that we are basically well, we share information with you guys. We conduct these webinars for informational purposes and educational purposes only. So please don't misconstrue what we share with you as a solicitation to buy or sell securities or anything else for that matter. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed person like a Series 7 stockbroker that can legally dispense investment advice to you. All righty, I think that covers it. All right, so nice little crowd today. So always like to take a little bit of time at the top of the hour here to let the new people that are in attendance know about the community that we've built around the technology that is Trade Ideas. And as you can see in the upper left-hand corner here, Barry's Trading Room, a great place to go whether you are a new trader or a seasoned trader, simply because the information that is shared in there is very valuable. Barry does a fantastic job at moderating a crowd of anywhere between 400 and 600 people, depending on the day. He does an even better job at showcasing his trading style and his techniques on using trade ideas to accomplish those trades. So it's a great place to go. And one of the best things about it, other than Barry, of course, is the price. It's free. If you shopped around on the web, you know that most trading rooms out there that are worth their salt are not free, and they're not really cheap either. But that's the difference between us. We've created this environment for our users to benefit. So if you haven't been taking advantage of the trading room, by all means, get on in there, get signed up. Of course, today with the 5 p.m. Eastern, Monday through Thursday webinars, you get myself and Steve. Steve's going to take the steering wheel tomorrow for the Trade of the Week webinar. Andy Linloff's going to ride shotgun with him. Q&A Wednesdays. I'd like to change it up just a little bit, bring in Dan Merkin, the CEO and founder of Trade Ideas, and usually Brad Williams, our Chief Technical Officer, going to ride shotgun with him, so always interesting. Andy's going to round out the 5 p.m. Eastern webinars with the Trading Studio on Thursdays, and I ride shotgun with him. And then we do something completely different on Fridays. We have the support webinar. And this one cranks up at 11 a.m. Eastern, and if the crowd is rowdy enough, we'll take it the full 3 hours, but we usually get a good 2.5 in there regardless of crowd size. The cool thing about the Friday support webinar is that nothing is off limits. Could be simple configuration issues or advanced backtesting, optimization, auto trading, brokerage plus. Anything's fair game. And the cool thing about Friday, other than that, is you get myself, Steve, Andy, and Sean in there all at once, all putting our heads together to give you the information that you want and need. So that's what we have going on throughout the week, Monday through Thursday with the 5 p.m. Easterns, change it up on Friday with the support webinar. Yet the webinar hat goes just a little bit deeper, and we also have Monday through Thursday, TI University. Now, all of these kick off at 12 p.m. Eastern. Beginners 101 on Monday, 201 Tuesdays, 301 Wednesdays, and 401 Advanced on Thursdays. So if you're new to the product, knocking these things out can get you over that learning curve a lot quicker than if you didn't use these things. So we recommend attending these live because there's always somebody like myself, Steve, Andy, or Sean hosting the thing. So if you do have questions as the material is presented, you can get those questions answered. I know some people have time constraints. Maybe you can't be in the chair and watch the live version at the designated time, but fear not. We've got all of these recorded on our YouTube channel, and since the content is static, it's the same every time, you can get basically it's the same thing. You just can't get your questions answered in real time if you have them. So if you do have to go the route and watch the pre-recorded versions and you do have questions, the email address info@trade-ideas.com, just pop us a question using that email address and we can easily get back to you and give you the information that you need. But the cool thing about the pre-recorded versions, you can go over them over and over again until your heart is content. So whether you watch the pre-recorded versions or the live versions, a great resource to get proficient with the product sooner than later. Of course, we always like to show how our user base has expanded since we introduced the very first AI module back in the beginning of 2016. Maybe those of you who have been keeping up know that we've added 2 additional AI modules since we threw out the first one there. And boy, you know, they've been doing pretty good and they just keep on doing better. You can see here the user base is responding well, increasing numbers through 2017 to 2018, and it'll be interesting to see what the bar looks like once 2019 closes out. In addition to the AI modules being added to the suite of products, we also released Brokerage Plus. Now, this is the add-on that you can use to trade if you have an account at Interactive Brokers, IB. The orange bars here are demo orders that are currently being fed into the system, and blue are live executions. So you can see since we introduced the product, it's just click, click, click. Every quarter, seems like there's more demo orders filled and more blue orders filled. You might be asking, well, why are demo orders even on there? Well, when you start using Brokerage Plus, you know, you probably want to go demo for a few sessions just to make sure you're doing the right things, hitting the right buttons, making the right keystrokes, all that good stuff. So it's just like demo trading in the regular way, in the more traditional sense. You know, you're on a new platform, you're going to do some demo trades, make sure you know what you're doing, and then eventually those demo trades become live. So we're seeing an increase in both demo and live in every month. Some of those demo trades are converted into live trades. So what does this mean? It means people like Brokerage Plus. I'm going to give you guys a little peek at Brokerage Plus later on in the webinar because we've got a new feature that we're all testing right now, which hopefully will be available to you guys as well. So we'll take a look at that towards the end of the webinar. All right, on to the market action today. As all of you are already aware, we had a nice little gap up here to start the session. It just seems like, you know, every day we have some type of gap. Sometimes it's a gap up, sometimes it's a gap down, but there's always some type of gap kicking in there. So Steve, if you're ready to show everybody some of your eye candy with the major tracking ETFs, I guess it'd be a good time to kick it on over to you here.
Eye candy, okay.
Yep.
Chart porn.
Exactly.
All right, I'm all set up here, rolling around on my floor, wheels, on my chair. All right, so I'm starting. Hello, everybody. Thanks. Welcome to my desktop. I'm going to start with the S&P 500. This is where we left us last week. And last week, the big discussion was, what in the heck is it going to take to get this darn market above not only that 50-day moving average, but more importantly, above this pivot line that's oh so important. And more importantly than that, a few closes above that pivot line to really demonstrate that the bulls are back in charge. Well, what do you know? What a difference a week makes. As I scroll forward there, a big push, very nice candle on this day right here, of course, giving us a nice bottoming tail and a definitive close near the top, not close to the top, with some green in the body. And then the last day and today, essentially confirming what we already hoped for, or the bulls already hoped for, meaning we did get some confirmation. We did not dip back down below this orange line. It does not seem to be a head fake. It seems to have played a game of capture the flag, and they've captured the flag on the other side of the enemy line here, and it seems to be holding. So what happens from here? Well, probably a little bit of consolidation. These moving averages are going to come up. Actually, that one was way too steep. That was the wrong one. This one, the 10-period moving average, will kind of come up quickly to meet. The 20 will kind of follow, and the 50 will get crossed, but eventually we might have some nice consolidation here, and then possibility to go in continuation. So what I'm saying is we could very well build a base, and the important thing is to build a base and not close and breach below the orange line that we, or the bulls, I should say, the bulls just reclaimed. All right, so that's really the story that's going on. It only took 5 days to kind of confirm that. Again, the big takeaway is there's no one-day reversal where we popped back down into this range. We don't want to be back down in this range if you're a bull again. We're back above the moving averages after a giant mess of a month back here. So maybe September will mellow out a little bit and let, give us some consolidation and some nice moves again where we can start looking at higher lows, et cetera, et cetera. So that's the story over in the S&P. Basically the same story in the NASDAQ. The NASDAQ, as we looked at last week, was having a difficult time getting through its 50-day moving average for the most part. That was really the level of concern over there, and a giant move forward. And gosh, actually an attempt to fill the gap, maybe there was. Let's see, the low there is 90.34 and the low today is 90.22. So look at that. There was an attempt to try and run the stops today. We can even look at this intraday and get more of a picture. There it is. There's that red line, the attempt to run those stops and enter this gap, and it didn't even approach but a few nickels into this gap before the buyers jumped in and said no thanks, and gave us a really nice closing candle, again, with the bottoming tail, the wick closing well off lows. So there was a real repellent nature of even trying to get the price action to get in and fill this gap. So that's bullish as well. We'll take that. Actually, this morning, Jamie was the one who pointed out the IWM was really outperforming everything else. It's almost like the money managers decided today was the day to try and bring in some new, fresh money and rotate into smaller caps. I'll go back here on the intraday chart. We'll do SPY. Just look at the last day here. And S&P opened flat and then went negative. NASDAQ opened flat, went even deeper negative, had a good recovery. But relatively speaking, IWM, Russell 2000, stayed buoyant for the most part the whole day and gave us a really strong close back on the daily chart at, what do you know, the old 50-day moving average, which seems to be kind of holding a lot of things up. So if the Russell 2000 IWM can start posting some closes that are above this 50-day, couple of days in a row perhaps, then we might start to finally stop giving the Russell 2000, the weak member of the herd bringing up the rear, just waiting to get eaten by the bear. It seems to be showing a little bit of life compared to everything else today. So that was another point of interest that I thought we should talk about today. And then lastly, the Dow in its glory is doing pretty much the same thing as the others, respectively above their 50-day moving average and just climbing a little wall there, a little doji, perfect doji on today. And 3 good solid days above that 50-day moving average. It seems like the bulls are kind of back in control here. Again, we'll see if these averages can kind of consolidate and then do a nice big push higher later in the week. As far as the one interesting sector we talked about last Tuesday in my webinar, we talked about watching the OIHs, and I'm just going to pretty much say that it looks like the oil sector is finally coming out of this mess. So I saw somebody else I respect on Twitter say it looks like oil may have bottomed. That's the word they used. And then when you look at this, it's been a horrible mess. The last time it really looked good was right back here. It gave us a nice pop off that moving average, and then everything went south. And from April and May on, it's been just a mess. Well, now it's finally starting to pop its head out of here and back above its moving averages. It might do some cleanup work, a little consolidation. Keep an eye on oil going forward. It may have seen the worst of it. But other than that, I'll talk about the trade of the week tomorrow in my webinar and anything else that develops. But that's pretty much the story, Jamie. The bulls have quickly reclaimed the good look of markets there from what we can tell, unless something changes.
Yes, thank you very much. Always good, Steve. I guess, hey, a couple more gaps and we're back to ATH, all-time highs.
Mm-hmm.
But is it ever that easy? We'll see.
No,
we'll
never.
find out. All right, let me grab the screen here again. Come on, there we go. All right, you should have eyes back on. All right, ladies and gentlemen, lots of good stuff to talk about today as far as what we have on the agenda here. So first, in keeping with tradition, let's just kind of talk about expectations with my compare count windows and what happened with those. Then we're going to talk a little bit about Holly. Holly had kind of a sleepy day today, just basically scratch. we could call it, up a tiny bit on a nice little handful of trades to the tune of about 26 here. But keeping in mind what we had for the prior 2 days, Thursday and Friday, which you can see right here on my 15-minute chart with the SPY, what did my compare count windows, and since there's probably a few new people in here today, I'll explain briefly what my compare count window here is looking at. We're looking at basically any stock that's capitalized in excess of $4 billion, hitting highs and lows in the opening 15 minutes with some accelerated volume. Okay, so after the first 15 minutes today, these were the readings that I had, which usually, if there's a little bit of room to be had on that daily chart, can mean maybe some downside action. However, you know, we always have to pay attention to how much room we may or may not have. So, looking at the opening 15-minute candle here, and I'll just expand this out. These readings were taken at the end of this 15-minute candle here, which it looks like we closed around 298.68. So somewhere about right here, if I just draw a line. All right. So a lot more big cap selling in the first 15 minutes than big cap buying, with some added benefit of accelerated 1-minute volume. So what do we do over the next 15 minutes? We came down here and then boom, took a nice little bounce, got about half of that back. A lot of people like myself thinking, hey, we're above the 10 period here, so you know, we just didn't have that much room here. But sometimes the action's a little bit delayed, and sure enough, later in the day, one of the biggest moves of the day was to the downside. All right. So the power of the compare counts holds up today. Sometimes it happens initially. In this case, it was kind of both. We had an initial downturn in that second 15-minute bar. Where we go 1, 2, 3, 4, about an hour and 15 minutes of bounce, and then boom, boom, boom. Set these lower lows down here with a nice little wiki close. So compare counts are pretty accurate today. Of course, you know, the timing is another matter. If it was easy to time things in the market, well, it'd be a different story. You know, probably myself, Steve, wouldn't be sitting here right now. We'd just be ironing our money and talking about what island we were going to buy next, but that's not the case. So compare counts can give us a good idea of what might happen, but timing is another factor altogether. So just wanted to take a moment to go through the compare count readings. And now what we're going to do is we're going to go over Holly and how Holly did today, keeping in mind that on a trade count of 26 trades, Holly was predominantly long, so kind of fighting upstream all day. I'm just going to expand the all trades blotter out here. And, you know, although we did have a nice smattering of short sales here, 1, 2, 3, 4, 5, 6, 7, still predominantly a long bias from Holly the AI, which simply, you know, the simple explanation, why did Holly have more long trades than short trades today? Well, based on what we've been doing in the market, as we, you know, we're just looking at here, there's a lot more alpha to the upside right now for obvious reason. And this is a statistically weighted system. So that is why pretty much Holly had a long bias today. So if we focus our attention over here on the individual modules, we had Holly Grail kicking out 4 trades, down a smidge, 2.0. These guys were both on diets today. Holly Neo overindulged a little bit, a little overeating there. 19 trades to be basically not even quite as good as 2.0. So a little bit of, you know, churn action today in Neo. Reminds me of a human, actually. We've all been there, done that before. In any case, basically, if we cancel these two out, 1.0 and Neo, we were up maybe 0.6 of a point on X amount of trades to the tune of 26 here. So basically a flat day, gross P&L wise, but after commissions and slippage, probably losing nice little chunk of change today, but nothing to get too upset about. So what I'm going to do here is we're going to talk about the risk on, risk off spread of the trades that did work today and that did continue. Could we have captured a little bit more out of that trade than what Holly did in her risk off mode? So this column right here, risk off, close profit, and then I've got the blotter sorted by risk on here. Yeah, Anthony, I see your comment there. It's kind of the same thing with Mondays and Fridays. We were talking about how Fridays are just kind of a crapshoot here lately on market direction. Of course, that was last Friday. But yeah, Fridays and Mondays, we could easily make that
Fridays.
assumption. Yeah,
Fridays
freaky.
more lately have probably been more due to the jabbering of the Trade Department going into the weekends, it seems like.
Yeah, and the tariff tweets and all that good stuff. So in any case, what we do when we're looking at the risk on opportunity is just simply examine the spread as of the close between risk off and risk on. So first on the list here, Etsy. Let me just expand my 15-minute out here so we can all have a decent look here. And actually, a really nice looking trade here on the Etsy. 91. I'm just trying to, well, is this the last candle? Yeah, that is the last candle. See what I'm talking? See what I'm looking at here, Steve? If
What are we
this
looking
is
at?
risk off, right?
Where's the?
Because this is a late day trade. We usually don't see them kicked out this late, but today it happened.
Right. Yeah.
So if we're up 91 cents into the close, I guess we're talking about, well,
Is that okay? What strategy is that? Is that one that closes at 15 minutes to the close?
breakout. Well, good question, Steve. Let's take a look here. Breakout,
Parent window.
245.
That's the deal. So it looks like it closed
Closed at the beginning of the
at the
candle.
beginning of that candle, and that was the last candle drawn. There's your answer.
Yeah. We're just not used to seeing these types of issues because usually they're earlier in the day and it sticks out like a sore thumb. But yeah, so this was the last 15-minute candle of the day. So she closed it out down here. And then in the last 15 minutes, boom, we got that little run up there. So that's why we're seeing 91 versus 66 here. So 24, 25 cents in the spread there. And basically, of course, this one's a little different because usually they're a lot more obvious, but hey, the bottom line is this. When Holly closes this trade out, by the way, a beautiful entry right here at 49.56 and pretty much a pain-free trade from the moment that the trade was entered. What I also like about this one is just, man, it's hugging that 10-period fast line like a glove, staying well above it. Like a little force field there, keeping that baby propelled up. And Etsy, what are they in? Ooh, miscellaneous stores except tobacco. All right, well, thanks for the
And
clarification
macrame.
there. Trade ideas. But when we're examining a Holly trade in real time and deciding whether we want to get into it, a lot of the times it's going to be predicated on that chart pattern. Even though that's not necessary because this is a statistical system, but hey, we're creatures of habit. In any case, chart pattern looked good, statistical viability behind it because Holly's bringing it to us, and relative volume, nice and juicy going into the close, 2.26. This little guy usually kicks out only 2.64 million shares, but finished the day almost kicking out 5 million. Beautiful entry, never was in any pain there. Bottom line is when we saw Holly exiting, we're thinking to ourselves, well, this thing's done nothing but go up. Maybe I want to milk it for this last 15 minutes. And have we done that and went risk on, which is basically just ignoring Holly's exit. Timed exit ran out. She's programmed to exit in a certain time period at 2:45, 15 minutes before the close, and that's what she does. But we could have ignored her or acknowledged and went, you know what? I think there might be a little bit more left in this one, and to the tune of 20 some odd cents there we could have gotten out of Etsy additionally. And over time, boy, that sure adds up. Even if you're only making an extra penny, 2 pennies, 3 pennies, and there was 20 some odd cents on the table here. So whether you got an extra nickel, dime, 15 cents, or the whole shebang, whole kit and caboodle, that's what it's all about, is just waiting until Holly exits and then sizing up the trade. A lot of the times we can even see her reduce risk or profit save and go, hey, I might not be in the trade right now, but I like what's happening on the chart. So this is a very good habit to get into. Sure, we want to see Holly spit out the trades in real time and take them, and hopefully they move in the direction that we think. But a lot of the times we can get an entry based on when she's exiting a position via reduced risk or profit save. So keep that in mind. Lots of different ways to skin the cat here. All right, so this one is just glaringly obvious here. Zero. Holly booked zero on this one, flatted it. ends up 70 cents at the close. Now this one reminds me of, well, me. Or a lot of other traders out there probably sit there and go, yeah. You get into a trade, it spooks you out, and you're like, well, you know what? I really don't want to let it sit here and stop me out because I thought I was right. I feel like I'm wrong now. I'm going to go ahead and punch out of it, only to have it rip in the direction that you want it to go several minutes later. I mean, we've all been there. We've all done that. However, I will bring this point up. That's why we have hard stops. That's why we have those in our trading plan. Holly has them. We have them in our trading plan, whether you're operating a percentage or dollar amount or some type of moving average or a bar reversal or whatever. That's why we have hard stops. So in the long run, most of the time, it's better sticking to our guns. Of course, everybody's going to make modifications to their trading plan every once in a while. Sometimes that's going to hurt us. Sometimes that's going to help us. But in this case, why did Holly get out? It wasn't a timed hold. It was a profit save, which looks like there was a profit, but by the time she got out, it was a flat. So here we can see Holly making the entry right here, 46.13. Next bar up, we get a little wiggle thrown at us. Hey, more times than not, when I enter a position these days, unless you just really catch some momentum stock, a lot of the times you're going to be red before you get green. Now, it's always nice when we get green. Everybody likes that immediate gratification. Who doesn't, right? But a lot of the times, you got to sit a little bit of red before the green comes into effect. You know, we did take a little bit of a pullback here, but maybe not even halfway down to what we're risking here. So all hunky-dory, and look, you know, it barely got through the 10 period and wicked back up. That's always a good sign too. So, you know, make a note of that moving forward. If you're ever feeling like you want to get out before that stop is hit, pay attention to what the fast line is doing or how the stock is adhering to the 10 period simple moving average, which is the green line here. That would have been very reassuring with the Cardinal Health trade here. But the bottom line is this: Holly, she sat in the trade. It's not going in the direction that she wanted it to. So the profit save and the reduced risk are the two audibles outside of the hard-coded things like profit target, stop loss, and timed hold, the two audibles that she can call to prematurely exit a trade. So bottom line is this: big difference between 0 and 70, right? Now, you know, wouldn't have been so bad if you did a little bit of that half and half methodology. All right, I'll flat half of it with Holly. I'll keep the other half with my hard stop. At least you would have made something. But ideally here, with the way the stock was adhering to the fast line and not getting down to the stop loss there, we could have just ignored Holly's exit altogether and went, you know what, I'm going to stick to my guns. And you can see what happened for the remainder of the day. Now, in addition to that, we did have some nice volume kicking for us. Finished 1.49 on the REL volume scale. Usually kicks out 2.78 million, did about, roughly speaking, about 500,000 more than the average 3-month a day. Now, what I'm also interested in on this one is once it catches a little traction here, check out what happens right here, about 12 o'clock my time, Central Standard Time, or 1 o'clock Eastern. Not only does the trade hold and work, but look, we got a nice little range break here. It stays nice and calm after that. So this would have been a great time to even add to that position as the stock continues to move up into the close. We could have leveraged that position and taken on more shares here with the range break and maybe even pulled out a little bit more because we sized up a little bit there. All right, some decent risk on spread here, MOV, Movado Group. A decent entry here, and obviously that was on the way back up from that wick. Otherwise, we'd see a stop out there, but this one made it the duration as well on the timed exit. So gets a little bit swifty with it right here, but check out once again what happens. We dip down through the 10 period and quickly snap back up, following bar hugging it like a glove as well, and then we get that upward momentum. So right here on the MOV, if we check out the float on strategy here, timed hold of 60 minutes, and that's exactly what happened with Holly. This one timed out as well with a little, you know, this one, A little torn here because a lot of the times, once we're above that entry line nice and tidy, then, the 50-50 methodology is the best way to kind of get accustomed to doing this. Hey, I'm going to take 17 cents with Holly on my first lot. Let's say we're in 100. We could peel out a Holly with 50. A lot of the times, once we're well above that entry line, I'm tempted to use a break-even stop. So you have two choices here. You want to risk a little, or do you want to risk what you made on the first lot and give it back in case we get the hard stop, right? So a break-even stop, you would have broke even on the second lot, kept the hard stop, it would have eaten up what you had in the first lot, but it never got down there. So a lot of the times, depending on the momentum, and since we did have a little downturn in the market, we have to keep that in mind. So as you move forward, if you find yourself in this position, you're like, hey, all right, I remember what Jamie said, I'm gonna take half off the table with Holly, take that money. And if the market's really trending up, well, then it might make sense to use the break-even stop. If the market's looking a little, uh, uneasy like it was today, maybe you just take the whole lot off, all right? And stick to a hard stop based on what the stock is doing and the volume and all that good stuff. So a couple of different options there. Minimize the risk with a break-even stop, or accept full risk, but you're putting your first lot profit in jeopardy. But in the end, you're managing pretty well, because if it does roll back over and get you on the hard stop, you flatted the trade, which is better than losing. All right, a couple more of these to look at. HIBB. Boy, these are more and more common. I'm starting to notice a lot of these here lately, where we got this big green opening 15-minute candle, and we get a signal, and we're like, man, it sure expended a lot of energy in that opening 15 minutes. Could be this opening 15-minute bar, could be one in the middle of the day that you see this. But I'm starting to see more and more of these work, even though it did run up quite a bit, expend quite a bit of energy. So we get the buy signal after the big green bar on the open, 16.49. Holly makes 14 cents right here, right? The shaded area is risk off. Of course, after this has developed a little bit, makes it easier, but this hadn't been generated yet. We're right here. So kind of a tough call here on this one. If we tried to stick to that break-even stop on this one, well, after we saw what happened here, might not feel too comfortable doing that. And then really we had to sit most of the day to get the rest of the, 23 cents there. So once again, a hard stop, sticking to our hard stop probably would have been the most prudent thing to do today. So from a very simplistic perspective, when we've got weakness in the market, if you really want to stay in a Holly trade when she exits, probably better to use the hard stop. If we would have stayed up here and been grinding to the highs into the second half of the day, second 5/8 of the day, then that should be able to act as a guide to go, you know what, I'm going to peel out a half with Holly, I'm going to stick to that break-even stop. Okay, so just some very basic observations there. All right, and lastly here, the last one worth mentioning today was this NBLX, which was a quarterback trade, one of Mr. Gomez's creations. It's been, quarterback's been performing for a very long time and probably will continue to do so, because, hey, a pullback is typically a great entry if you miss the initial run. Everything's got to pull back. That doesn't mean everything does pull back, but most stocks do. So nice little entry here, 25.24 on the NBLX. And look at what Holly did. And this is classic. This is classic. We get flatness, right? Not including the entry bar for the next 30 minutes, we get sideways motion. And this is typically, more times than not, if we get this type of action, you're going to see Holly bail out on a reduced risk or a profit save. So, imagine you might not have even been in this trade, but you see your screen flash, maybe you've got your sounds attached here, and you're like, what's happening over here? I just saw Holly close this trade out for a flat, and we're just going sideways. And a lot of the times, this little sideways action is not necessarily a bad thing. All it really means in the grand scope of things is that buyers and sellers have become equal for a period of time, right? So when we see this type of action, not getting anywhere near our stop, this one would have been a great one just to go, you know what, I'm ignoring this. We might get a little bit more consolidation, but over the course of time, I've been seeing this a lot longer than you guys. You know, Holly's been around since 2016, so I've had a lot more time to see these types of plays, and just like anything else, no substitute for experience. But when you see Holly exiting on a profit save or reduced risk, if you feel comfortable, and we haven't made any excursions down too close, too close to the stop area, and we're just getting this flat line, a lot of the times this can be a good initial entry. Maybe even get a little bit better price than Holly as it ebbs and flows below the entry line. You know, that opportunity was right here. This 10-period fast line gives us the comfort to stay in it. So on this one, we could have even got a better price than Holly and enjoyed this action into the close. Now, if this wick wasn't up here kind of screwing up the chart, you know, that candle body there, that would have been a nice time to beef up the position if we were in it back here with Holly. So on this one, since -1, 26, that's 27 cents a spread in there between risk off and risk on. Pretty big difference there. So just keep that in mind moving forward. When you see Holly closing things out prematurely, size those things up, see if the chart looks good, because a lot of the times we can get a better price than Holly and still have a winning trade there. All right, so that's about it for risk on, risk off. I do feel compelled to mention MNK today because, wow, look at that little guy. Little low price stock, but that thing kicked out 9% going into the close today. Pretty impressive there for a percentage return. Coincidentally, that was a prior Holly pick from, I can't remember if it was Friday or Thursday, and then a continuation from today where she signaled it again. All right, so now we talked about Holly's action today and risk on versus risk off and how to capture hopefully some of that risk on, risk off spread. But now we're going to talk about following prior Holly signals. And I've just started talking about this in the last few webinars, but boy howdy, we seem to be onto something here. And just like everything else, does it work every single day? No, but it's working a lot here lately, and today was a classic example of that. So following prior Holly signals, well, what exactly does that mean? How many of them do you follow? Well, I've gotten into the habit of following the prior 2 days, right? So today, through these two windows right here, which are just high-low tickers with a slight modification, I fed all Friday, I fed Thursday and Friday Holly picks in there. All of the ones that when we look at the blotter from those days that finished flat or better, all right? So they just couldn't have finished down or losing money. So if they finished at 0.00 on risk on, they go in, and anything above that goes in. So the blotter looked a little bit like this, and I'll just kind of walk through this just in case anybody wants to see. So, you know, we look at Friday, the 5th and the 6th, and we just come up here and we tell it, all right, just feed me the 6th through the 5th. That's all I'd like. And when I make that change, now the blotter's in historical mode, only showing me things from the 5th and the 6th. So you can see here, I've still got everything in risk on sort. So everything from here on up went to my respective long and short list today. MRNS at a 00, INT at a 00, and anything that was at a 00 or positive went into my long and short list today. I'm just going to go ahead and kick this back to real time so I don't confuse myself. But I think we're pretty much done with the Holly blotter today. And then I have respective custom lists that each one of these windows are pointed to. If I go into this one, you'll see this one's pointed to my Holly longs, and this one to my Holly shorts. So that's a very simplistic process to get into every morning, is collecting those symbols, putting them into your list, and then making sure your windows are pointed to them. Now, as I mentioned earlier, these are just high-low tickers with one specific filter setting. For the longs, they have to be above yesterday's high, and hopefully just as they're getting above it. And for the shorts, they have to be below yesterday's low. So that's why we're using the position in previous day's range to achieve that with a respective high and low as a trigger. And I've gotten also into the habit, just like with any trading strategy, do you want to jump in there right on the open? Well, you can, but it's not advisable, right? So typically, I'm the type of person, maybe wait 10, 15 minutes, depending on the type of play and, those opening 10 or 15-minute candles, how crazy they look. But for these plays, I'm choosing to sit out the first 10 minutes, okay? So after the first 10 minutes are up, everything that comes through here gets my attention. And if we just scroll down here, I probably won't get all the way back to the open, so we're just going to look at today's history. And we're just going to scroll down to the 10-minute mark. Okay, there we go. All right, so not 8:37, too early. Here's the first tick out today, GME. And boy, if you don't, ladies and gentlemen, if you didn't already know, the little retail stocks have been just going crazy for some odd reason. But here we have GameStop, something that was circling the drain just not too long ago, and probably will be again based on the fundamentals of the store, but market didn't care today. So we had our first signal coming out of this window today at 456, and I've marked the line right here, right at 456. As I was saying earlier on that one play, I already forgot what it was. Big green candle, 456, well, man, it already ran up this much, and that's a low dollar stock, right? That's a huge percentage move in that opening 15 minutes. Simply did not matter today. You buy it at 456, you had maximum profitability up to the 492, 493 level, and that is a maximum percentage move from 456, not even including this area down here. From here up to here, I might be a little off on my math, but I think it was around 7.8% move from 456 up to here. So great profit opportunity, of course. If you didn't take the cookies, look what we had to sit. I don't think anybody would want to really sit that wiggle in order to get back up here, but what could have acted as a good guide to get us out? Well, we tested that 10 period here, bounced. We tested it again here, bounced. Notice what we're doing up here, setting up this little area of what appears to be resistance on the 15-minute. Then we get the close here, and then voila, swoosh down to the bottom. So, plenty of time to get out somewhere in this area here. Even if you got out at the lower end of the candle here, that's still a pretty, pretty impressive gain there. Yeah, Gary, I see your question there. And this technique was originally spawned by Barry. The same person that moderates our trading room. He does it a little bit differently. I'm watching the prior 2 days. He started off watching, I forgot how many days. So it's the same technique, just with a little bit different, preference, right? Some people might want to watch 3 days. Some people might want to watch 5 prior days, right? I try to limit my amount of alerts, so I'm only watching the prior 2 days. But hey, it might even work well with just the prior day. I haven't really tried that yet. But yes, to answer your question, Barry is the guy that originally came up with this. And as far as the 10 period moving average goes, Steve, a few years back, is the one that turned me on to the 10 period. Seems to work really well with the 15-minute time frame. Of course, you might notice correlations with 10-minute as well. I've even noticed correlations on the 5-minute, but as a whole, I prefer the 15-minute candles when watching the 10 period. All right, so that was the first one out of the gates today. All right, and then we had one of the big boys making an appearance today, the good old Schlumberger, and this one, 34.63, which I've also marked up right here. And boy, what a nice move. I mean, pain-free all the way up here, Once again, the characteristics of this one, very similar. Once we started cracking that 10 period is when we stayed below and kind of grinded lower. But this one really didn't give a whole lot back today. So if we 34.64 here, we topped out around, let's see here, 36.46. So I believe this was at the top here, right about a 5% move on Schlumberger today. Once again, just a beautiful trade, and with the added benefit of a little consolidation action for about 45 minutes here, 45 minutes to an hour. So if we're in it here and we get this little sideways action here, and then we get that break, man, would have been a great time to leverage this position here and enjoy the rest of the run up. And I mean, this thing was well above that 10 period the whole way today. So very good action in Schlumberger today. And let's just see how the volume closed. 1.39. That's pretty good for a stock of this magnitude. You know, we got a 47 billion market cap on this guy. Usually kicks out 10 million and kicked out close to 12 million today. So the second one out of the gates today, Schlumberger, pretty darn good. But then you'll notice all the repeats here, which we're just skipping through here. INT, not bad either. INT right here, entry price of $39.90, which I've marked up here. That's right about $39.89. What can I say? You know, you make the entry here. What do you sit like a 10-cent wiggle maybe? Nothing to get excited about. Well above the 10 period as well. Nice little pop, a little downturn, but just inchworming up for the remainder of the day. Interestingly enough, this little red line here indicating short-term resistance levels, which didn't really matter today. Just popped right through them, gravitated back down to it before moving higher. So I do believe with INT at the highest point today, not quite as grandiose as GME and SLB, but still kicking out about 2%, which, hey, in today's environment, for an intraday move of 2%, man, not a bad deal. Yeah, William, everybody's muted. Nobody can talk. Okay, you should be hearing us, but nobody can speak. Otherwise, it'd be chaos. So you can talk to us through the questions panel. The audio should be coming through. You should be able to hear me. But obviously, if you can't hear, you're not hearing me right now. All right. Notice that we're getting short on time here, so I'll try to speed through the rest here. Another big cap stock here, Gilead, with another beautiful entry, 65 and change right here, 65.03, I guess to be exact. And then just pretty much off to the races with Gilead. Once again, it puts in a top up here, takes a little pullback here, bounces off that 10 period, gets a little bit bleedy, but catches its traction back again, sneaks back up here. So if we're already in it from back here with a really nice price, excellent time to add to that position right here to get the remainder of that hour-long run, putting in the top up there. All right, so let's just check the time here. All right, we still got about 5 minutes, and we still got a few more to talk about here. So next on the list, I believe, without scrolling too far down, VFC, let's see, 87.79. So I think I missed one over here earlier saying 82, but hey, 3 cents. Bottom line is this, here's the entry signal that we got from this ticker right off the bat, 87.82, we'll call it 87.80. Just another great entry, talking about immediate gratification. You didn't have to wait long on these. A lot of times are after you push the button a few seconds later, already creeping into the green. Just like the other one that we took a look at here, what could act as a level of congestion or short-term resistance level. This one just did not care, powered right through it, went on up here, and I believe VFC at the max, you're looking at about 1.8% gain from the entry level up to the highs here. Probably a little bit juicier into the close, maybe, maybe not. But the bottom line is the worst performer today out of this whole lot, which there were 1, 2, 3, 4, 5, 6, 7, 8 plays that came through this ticker that were all Holly Priors, and the worst performing one was this guy right here. Okay, SLF, I believe, with an entry price of 42.88. would have been about right here, and I marked this one up, I thought. But if we just kind of adjust the line right here to 88, at the top here, looks like a decent move, but was probably only up a max of about 0.6%. And it was the worst performer today. We did have BPOP with an entry level here, with a, I just was notating the stop here. This one, I was like, well, this one came pretty close, but with a 1% stop, you stayed in the trade all day, all right, which isn't that big of a stop. So BPOP and MMSI still kicked out 1% each at the tops. The worst performer was SLF out of 8 trades today. And then you had GME with almost 8%, SLB with 5%, Gilead and INT with well over 2%. So this little guy knocked it out of the park today. That's really the only way to sum it up today, in the face of a not so nice market. So that's powerful. All right. And yes, Anthony, what I'm talking about here lately with these guys, it's Holly based, but tracking the prior 2 days for continued movement. Yeah, William Decker, I hear you. I see your question, Jamie, question mark, but I don't know if you can hear me. So here we are at the top of the hour, ladies and gents. Only got about 5 minutes left. I would love to help you out there, William. I just don't know how to go about it. I'm looking at the questions panel here. How are those buy and sell signals being generated on the guild chart? Okay, sorry about that. It was a little truncated there. So got a couple of minutes here. I'll be happy to go back here to guild. So guild, if you're talking about my entry signals here, these were placed here by me. These were the prices generated by this alert window here. All right. So William, I don't know if that was what you were referring to or not, but I think it is, because these are the only price levels that are on the guild chart. Now over here we do have, or on the right margin here, we've got the smart stop, and on the dailies we've got the swing exits and the profit targets, but these are automatically appearing on here. And Anthony, will you ever see buy and sell signals outside of Holly? Well, you mean just in general, or are you referring to the webinar today? Sure. Usually I talk about range breaks, which are outside of Holly, but due to the nature of what we've been finding out with these Holly prior plays, it makes sense to spend the time with the webinar today showing you guys what's worked the best. So that's why we're spending time here lately on the Holly prior plays. And since we are out of time here, I'm going to do a real quick thing here, and I'm going to show you guys Brokerage Plus. Now you might be sitting there going, well, we've seen Brokerage Plus. What's so special about this one? Well, I'm on a developer's version. We're testing this out. But what you see right here are just some random positions that I just threw onto the blotter here, so we'd have something to look at. But this is Brokerage Plus in the upcoming feature that should be available to you guys, where you can trade in demo mode with Brokerage Plus, right? So, to go in demo right now with IB, you had to get set up with a fake account. Well, not fake account, but demo mode. You had to pay for data, and then you could demo trade through Brokerage Plus. Well, now you don't have to do that. You click on a symbol, you want to trade it in demo mode, all you do is hit the buy button. BNFT shows up right there. Hey, look, SLB, I want to buy it after market, or during the regular market, just buy it, sell it. So this is coming. We're just testing it out right now. Wish I had a little bit more time to spend on it, but you will be able to paper trade just by pulling up Brokerage Plus, whether it be manual signals like I'm showing you right now, or loading in an automated strategy and watching it go as well. So hopefully that's going to be available pretty soon. As soon as we get the bugs worked out, we'll be releasing it to you guys. All right. Well, Scott, if you're ready to walk us out, tell everybody how they can save a little bit of do-re-mi on an upgrade or a new subscription. I think we're ready for you.
Sounds good, Jamie. Thank you. Yeah, just a couple things on the way out. There are a new series of ebooks. You should check them out. They're free. Just go to trade-ideas.com/setup to get them. Just plug in your email address. You get taken to a download page and get an email with the download links as well. Both Jamie and Steve contributed chapters. They're organized 2 chapters per book by subject, so check them out. They're very useful. We've also got a podcast. We just dropped a new episode for the end of the summer. We're coming back into a regular schedule. Put that out yesterday. They usually release on Fridays. So you can get prepared to get the next one by searching for Trade Ideas Podcast wherever you listen to them. Click subscribe, get the newest one automatically downloaded, and then you're ready for the next one. We have a promo code that's good this month, Summer End. Use that, all caps. It's good for 15% off your first month or year of Trade Ideas, any subscription, or the Brokerage Plus license. You can also use this to upgrade from standard to premium. Keep that in mind if you decide you want to move up from standard to premium. Just use that in the upgrade path and save 15%. Any questions with anything, email info@trade-ideas.com. That goes into our help desk software. It gets routed to the appropriate team member. You get a fast reply. You can also follow Jamie on Twitter @QuantBot. Follow Steve Gomez on Twitter @TodayTrader. Facebook.com/TradeIdeasPro is the Facebook page to like and follow. Go ahead and do that and share stuff we post with your friends. We're going to have a recording of this up tomorrow or later tonight. Stay tuned for that. You'll get an email tomorrow from GoToWebinar with a link to the playlist so you can watch the replay. Thanks, Steve. Thanks, Jamie. Have a good one. Thanks, all.
Thanks, everybody. Thanks, Steve.
tomorrow.
Thanks, Scott. We'll see you guys tomorrow. Bye-bye.
Yep. Bye-bye.